Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Dustin from Convoy Home Loans. How you doing, buddy?
Good. How are you?
I'm doing well, man. So let's talk about DSCR loans. Let's define, just in case it's the first time somebody's watching, define that, what it is, why it's important. Let's talk about prepayments, what those are, why they're important, and then merge them together with what you introduced last week, your warehouse line, because you guys are offering something pretty sexy that one rental at a time fans need to understand. But let's break it down in chunks. So first, what is a DSCR loan?
So DSCR loans stand for debt service coverage ratio loans. What they are is they are only for investment properties, but they allow people that, let's say, aren't showing as strong of financials on tax returns or bank statements, let alone even working. You don't have to be working at all.
Wow.
All you need is a down payment, usually 20%. But what we use to qualify is simply the rents that you would be either receiving if you're purchasing a property, or the rents that you currently are receiving if you own it and trying to refi.
Yep.
We use that to compare it to what the new mortgage payment would be.
Yeah. This is for folks that are just kind of still trying to figure out what a DSCR loan is. This is basically the difference between residential financing and commercial.
Yep.
So I'll tell my experience, right? When you go in to buy a home, they run your credit, they ask for your tax return, they want two weeks of, your paychecks. They want to know how much savings you have. It's about you, the borrower. When you flip over to 5 units, in some states, I hear it's 6, which I don't understand, 5 or 6, but whatever. It becomes about the building. Will the building support the loan? That's what a DSCR loan is, and you can use it for resi or commercial lending, but it has to be an investment property. Is that a fair comparison?
100% correct.
Yeah. So DSCR loans are very powerful. Again, if you're self-employed, unemployed, you have the down payment, you can make it work. It's a possibility. So now let's talk about what a prepayment penalty is. You and I obviously know what they are, but somebody listening may not. What's a prepayment penalty, and why do they exist?
Yeah, so prepayment penalties are basically a penalty, of course, that incurs if you pay the loan off over a certain amount of time, usually within a 1, 2, 3, or 5 year period. These are very, very, very common in commercial loans and are pretty much every single DSCR loan. And normally, from a bank's point of view, if you put a 5-year prepay on it, meaning, hey, if you pay this loan off in full in the next 5 years, you're going to pay us a penalty of X amount of dollars. The rate that you would get is going to be better, right? Because you're the bank's guaranteeing themselves interest payments for 5 years. But if you go with like a no prepay option, the rate's a lot worse.
How I look at prepayment penalties, it's almost the reverse of points. So let me kind of throw this out there and see if this makes sense. This may sound comical. I do not mean it to be comical. Banks are in the business of making money. They make money by making loans, and generally speaking, they are calculating interest payments, right? They're basically have savings that they pay nothing, and then they loan out via fractional loan, more money, and they own 6 or 7%. They want to de-risk that process. They basically want to guarantee a return, in my opinion. So one of the things they do is they charge points. Hey, you want a lower rate over the term? If you pay us a point of interest up front, we'll lower the rate, right? Because they're basically betting that most people get out of the loan in 8 years. But if you hold the loan for 30 years, you win. Congratulations. Prepayment penalties are the reverse. Hey, if you're willing to guarantee us at least a minimum profit for over 3 or 5 years, which is the prepayment, we'll lower the rate. Because again, we're certain to at least get that number. So again, prepayment penalties or points are just the way for banks to guarantee a minimum profit number. And if you hold the properties long-term, you win, which is really one rental at a time, buy and hold. But that's kind of how I see it. Is that fair?
I mean, that's a great analogy, and it's once again 100% correct.
Yes, I've done this before. Now, you brought to this channel something super sexy last week. You and Jonathan and Convoy Home Loans got a warehouse line. As I understand your warehouse line, this is basically yours and Jonathan's to quote unquote play with, use as your discretion.
Correct.
Something you have done is you've measured, you've created, or you leveraging a DSCR product with no prepayment penalties and giving just stupid low rates. So put all that together for us if you don't mind.
Yeah, so essentially a warehouse line is basically like Mike said, our own glorified credit line to be able to fund loans that we're taking the risk on because we're going to be the ones selling it on the secondary markets for DSCR products. Because we've had a warehouse line for the past 2 years for conventional loans because those aren't as much risk. You know, if you fit the box that Fannie's going to buy it from us. But getting a DSCR loan product on our warehouse line took us a long time. But once we did it, the major difference between a DSCR loan with us, if we use our warehouse line, compared to if we send a DSCR loan to one of our wholesale lenders, investors, et cetera, is that we negotiated that there would be no prepayments whatsoever on any of the loans. So there's no prepayment.
Not 6 months, not 1 year, nothing.
No,
Wow. Dude, you're giving away money. I'm just saying. I'm just saying. What are you doing? What are you doing?
Because every loan that we've been doing for anybody the past, 2 years, I would say has either had a 5 or a 3 year prepay because we let them know
Yeah.
it's going to get you the best rate. Your goal is to buy and hold it. Just go with this option, et
Yeah, of
cetera.
course. Yeah. Again, if you hold it past the 3 or 5 years, you win. That's the whole kind of trade-off. Yeah.
Exactly. But where we're trying to obviously gain a little bit of a turnover in the market share is the rates on our warehouse line. Now it has to be in one of our licensed states, which you can go to our website and look it up. We're in like 16 states. It's not all 50. But we can do these starting rate at like 30-year fix at like 6% right now.
Wow.
If we broker it out, we're at probably 6.7 to 7%.
Yeah,
So
that's why I would have guessed. Yeah.
Difference.
Yeah. So folks, again, right, we bring the best of the best to one rental at a time. Convoy Home Loans has proven it. They came to the channel out of the gate with 40-year mortgages, which lots of you jumped on, whether the full 40 or the 10-year IO plus 30-year. They now have this warehouse line. They're doing really, really great things for investors. If they want to reach out to you and see how you can help them in their state with their deal, Dustin, how do you want them to do that?
Yeah, go ahead and shoot us an email at privateclient@convoyhomeloans.com. Just mention that you're from ORAT, so me or John can take care of you personally.
And again, folks, that's the deal. You tell them you're coming from ORAT, you get the two, Dustin and or Jonathan. Thanks, buddy.
Thanks, man.